Hello, everybody. Good morning, and yet welcome to yet another session of Beyond Bowls and Beers. We at Team StaG really thank all our audience who come every Sunday to interact with us and try and share the insights around the markets and the development for the week. This week, we'll try to discuss the markets, the results which has come out during the week, and we will discuss one of the favorite stocks of the street, Asian Paints. Let's start with the markets. In terms of movement, the market was fairly lackluster with hardly much change on a week on week basis in Nifty. The good point was that we had consolidation in the market with with a positive bias. When we ended the session last week, we said that it's important that this week the market sustains after the after the uptick we saw last week, and it was equally important for the market to close over the technical support level of 80 and I can very candidly say that it shows that we have ended above the 80 for a week after a long time. This gives me the confidence that probably the worst is behind unless we see another major negative event. During the week, there was no major news flow other than the Delhi elections results which came out yesterday, and as hinted by the exit poll, BJP managed to win Delhi back after a staggering 27 years. Delhi, as highlighted in the past also, is not the most important state, but it was very important for BJP, especially with Bihar coming up. And it's important for the BJP to continue with the momentum after Haryana and Maharashtra. It's important for BJP to continue the momentum from a stock market perspective because it brings stability to the government. Keeping our political bias aside, it's important to understand that for markets to do well, political stability is important, and the government in the center currently is of BJP. I keep my political bias out when I at least try to analyze the markets. Coming back, there was no major event in terms of political or financial, and the results continue to be mixed. When I say mixed, I mean the era of steep downgrades has stopped, and we are seeing more of numbers which are slightly better than the expectations. We saw broadly few stocks continuing to disappoint on margin, uh, on the earnings growth seems to be muted in some cases, but broadly, I would say it's more hits than misses. As we shared it in our newsletter, which we released earlier during the week. For those who have not got our newsletter, they can go on our Twitter handle and check out the same. Let's cover the results which came during the week both from a portfolio perspective and some of the major ones which are not in the portfolio. Let me start with the portfolio stocks first. Uh, the most important results for us were SBI and Bharti. While SBI operationally had a miss on the operational number because of the treasury losses, because of the forex move, in terms of advances, in terms of deposit growth, the numbers looked fine. The disappointment was more because of NIM and the treasury losses. The management guided that it's tough for the NIMs to improve from here on, given an interest rate cycle, which clearly implies that the management realized that the era of rate cut has started, and that we saw on Friday when RBI did a 25 bips repo cut. Im- but what was also important to highlight here is that RBI clearly stated that they will look for further action only based on the inflation data. The government, in its budget, clearly gave the importance to growth over inflation, and RBI seems to be balancing that by going for inflation over growth, while they do intend to support the growth, but not at the cost of inflation. What was important in SBI's number is the commentary of the management, which said that they continue to find things very healthy on the asset quality side and they believe that the growth is going to come back. They are confident of their guidance. SBI, a company with 20% plus ROE, 1% plus ROA, trading below one time book, and the kind of results which the subsidiaries have given gives us the confidence that SBI is one of the cheapest quality large cap banks around, and we are strong, continue to have a strong conviction on our thesis. The other important number, Bharti. Bharti continues to be stellar numbers. Operationally, amazing numbers, increase in ARPU, increase in the subscriber base, everything is perfectly fine. The one-time profitability increase happened because of the merge, because they have consolidated the accounts of Indus Tower, and they booked a one-time gain because they bought a major part of that at a lower price. But that's one time, so we will not consider that for a structural number. But the EBITDA margin, the EBITDA, everything looked good. There was some impact expected because of the currency from the African business, but the India business looks stellar, and that was reflected in the price also. The following day, as Bharti closed around 1700. We continue to believe that while Bharti has done well and is not cheap anymore, this is one stock which will continue to give you 20-25% CAGR, both in earnings and price over the next few years. Indian telecom story is very much intact, and you only have Bharti and Jio to play with. Idea continues to struggle. We will look up to Idea's number to see what are they doing on the financial side to improve their capex and everything. Coming to another result, which is important but not in a portfolio stock, is Asian Paints. Asian Paints, a darling of the market, a leader in the print industry, reported the numbers. The margins were better, but the revenue growth was missing. The volume growth were in low single digits, while the price deterioration even ensured that the revenue growth was even lower. What was staggering was the call and the candidness of the management to highlight the fact that the company will see volume growth but don't see a price growth, and as a result, they are not very bullish on the overall growth. Our fundamental team has done some analysis, and what we have realized is that the company is facing a price erosion for the last 5-6 quarters, where the revenue growth is lower than the volume growth, which is either because of the sales miss or because of the price decrease. That is something which we had anticipated in our reports when we first wrote about it in early 2022, when the price was at around 3,300. Since then, markets are up 33% roughly, and the stock is down around the same. That's a staggering underperformance for a large cap quality like Asian Paint. So we did some further analysis to understand that the stock at 45 PE, which is a valuation nearly a decade back, and 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 roughly 50% of the peak valuation, is it attractive to look at as a value stock? And while we were tempted to look at it, but when we did our analysis, what we realized is for the next 3 to 4 quarters, we actually may see a decrease in the earnings, something which you don't associate with Asian Paint. And if that happens, then the stock may not do anything and yet may keep becoming expensive. While while a quality stock at a good value is something which one should look at, but not when the earnings are not growing. And hence a result, we continue to maintain our stance of avoiding Asian paints. It's not a hard sell as we had in our communications in the past, but we believe that while there's value, but there is no opportunity here. As a result, we continue to maintain our bearish stance on Asian paints, at least for the next 3 to 6 months, and we'll wait for green shoots to see if there is a change, because the risk reward does look fine at current levels, with most of the negatives being priced in. And I think that the whole of the street has gone underweight in terms of holding, because the stock has done fairly been very weak for the last 6 months per se. Coming to back to market texture, I think the worst is behind. This week we should see some more uptick in the market. Our technical team says that 23,800 is an important level. If we can close our bid during the week or during the month, we are good for further upside. FIIs continue to be the net seller. They were net buyer in one of the 5 days and have been net seller for the 4 days and continue to be net seller in the cash market. We would be hoping that a close of 23,800 will see some flows from them, and hence market should do well as a follow up. Uh, in terms of results, we are in the last week of the result season and don't see a major trend changing when it comes to results. So once the result season is over, we'll come out with a with review of the portfolio stocks, the results, and what do we see. Hopefully that will hit your mailbox by that time we meet again. If not, then maybe a couple of days later. Uh, that's it from my side for now. As usual, I wait for a couple of minutes. You can drop in your queries either on the chat or WhatsApp me, and I will answer it if there is any queries. With no more questions, enjoy your Sunday. Thanks for being around. If you ever still have any queries, you know how to reach me out. We'll be glad to answer your queries. Thank you, everybody, for taking out the time and watching this episode of Beyond Bulls and Bears. See you again next week with a, a new episode of Beyond Bulls and Bears. Thank you. Take care.